Welcome everyone. My name is Bernard Boutin. I'm the head of corporate affairs for Intuit Canada. And today we'll be talking about payment modernization and the impact on the global economy. I'm joined by Jacob and Bryan today. So Jacob is a colleague from Intuit and Bryan from Interac Corp. I will just turn to them to introduce themselves quickly. We want to make sure today that we keep time for questions and interaction with you as well. We'll try to cover what is a pretty technical topic, with an eye level conversation first, and then we'll go into that conversation with you. So, Jacob, let's start with you.
Yeah, great. It's nice to see everyone. My name is Jacob Chappell. I lead our product team for the payments organization at Intuit. I've been at Intuit for a little bit over 10 years. My background's totally in fintech. I've worked in a couple of our different fintech businesses. Just a little bit about the payments organization at Intuit. Similar to the rest of the company, our general mission is around powering prosperity in the world. And the way that we go about that specifically with payments is by getting money into our customers' pockets. It's how do we enable them to get paid quickly, get money quickly, and enable them to run their business in an efficient manner.
Great, thanks, Bernard. Hi, everyone. I'm Bryan Bossin, and I lead government relations and external affairs for Interac. Interac is a household name in Canada, but we're less known internationally. So our business is payments. So we are the debit payment network in Canada. We also run a number of different services, including digital verification and authentication solutions. So we have a mix of both public and private sector clients. We are owned by a number of Canadian banks and financial institutions. And Canadians use Interac about 20 million times a day to pay, receive money, and just access different types of digital services. So one of the things that I think is really critical, though, about being here is, the topic of payments modernization is something that we've thought a lot about. And really, from Interac's perspective and my view of it, I think it can be a absolute linchpin for economic productivity and competitiveness when we think about not just sort of business productivity, but also, consumer digital experiences. So I'm looking forward to the conversation today.
Awesome. And let's continue with you, Bryan. I'm just curious, can you just define what we mean by payment modernization first? So we have like a solid ground for this conversation, and everybody's in the room, I think, is familiar with what payment is, but what are we trying to achieve here with what are we trying to change?
Yeah, for sure. I think, broadly speaking, payment modernization, I mean, you can take it in a number of different ways, but it involves both increasing the speed of payments and increasing the sort of data and experience of payments, I would say, are the two key sides of it. So, a lot of things are often lumped in. We'll talk a bit about, open banking or stablecoin policy, but
Yeah.
I think broadly speaking, payment modernization generally refers to how do you ensure that businesses and consumers can make and receive payments and be able to do that in the channel and in the experience in the way in which they desire to do so.
Okay. So, Jacob, we know that a couple other countries, the UK, the EU, Canada, have moved legislation to open the rails, the real-time access to real-time rails to payment processor, and not just limited to banks. So, where are we in the U.S. right now, and why do you think that this move would be potentially beneficial for our clients at Intuit? And what's the benefit?
Yeah, good question. I'll start with the second part,
Yeah.
go to the first part. So why this is important for our clients. So we serve primarily small businesses. And for a small business, it's not just about being able to get your money a little bit faster. It can literally be the difference between being able to do 2 jobs in a day and being able to do 4 jobs in a day, because you're able to get a little bit more money that day so you can go buy the resources that you need to go serve additional customers. So we're talking about the ability to grow the impact of small businesses, which is already large, right? Already around 43% of GDP in the US is generated by small businesses, and we want to continue to grow that engine. Now, in terms of what we've seen in other countries and where we are in the US, it's kind of an interesting flip-flop where in the US, we have the technology, we have the FedNow rails, we have real-time payments. We don't yet have the legislation that enables payments players like Intuit to go access that directly. And then in some of those other countries, we have the legislation that enables that. The technology isn't quite there yet. And so we're in a spot right now where we're really excited to get our hands on that technology. We think that there's a lot that we can do to benefit our customers. We're really looking forward to be able to play with it more.
Same question for you, Bryan, if you compare where Canada is right now, so we have second part of the legislation that was, that we waited for in order to access the real-time rail, which is about, I think, to be completed. So can you expand maybe on that, on the like situation in Canada right now and where we're heading?
Yeah, definitely. And I think this is the interesting point. And so, not to get too technical into it, but the what Jacob mentioned is correct. And the two experiences, Canada and the U.S., are actually interesting in terms of the path of divergence, where the U.S. has the real-time networks, lacks the sort of non-bank access. In Canada, we have two pieces of legislation. One is called the Retail Payment Activities Act, and the second is the Canadian Payments Act. Both have been modernized over the last 2 or 3 years to allow for system access. And the two pieces, the Retail Payment Activities Act is the sort of safety and soundness legislation. It's the legislation that ensures there is enough capital being held by these fintech companies and ensures that they have policies and protocols in place to protect the financial sector and the payment system. But we don't have a real-time payment system in effect yet. It's been long delayed. We're expecting it sometime next year. But I think really the key here and the key unlock for both is going to be getting both simultaneously. Speed is increasingly table stakes when it comes to payments, but access is really what's going to drive some of that innovation, some of that growth in the market.
So it means payment service providers will be able to become full members essentially of Payments Canada and have their own control over that real-time rail. That's what it means essentially.
Exactly. Yeah. If you have a business model that relies on wanting to access those payments, you can. I think, there's going to be different models. You see already, people finding ways to get around the system in some respects. There's a story a couple weeks ago, a Canadian company that's launching a new product around EFT, electronic fund transfer, where they are, doing so in an instant way based on a credit model. So they're sort of loaning themselves money to be able to finance these transactions to make them feel real time, even though they're not real time. So I think there is a risk too. If we wait too long, the market just passes us and we end up having these sort of different hacks and different ways around it that are achieving in effect the benefit that we want to get to without all of the sort of, cumbersome, regulatory process.
Okay. And so let's go back to that. Like we're in the United States. Let's say, okay, you have the rail already set up, and now you have legislation. Just want to understand like what it means practically for small businesses. We talked yesterday in our conversation. You were saying it's good to have the technology, but if it's not easy to use, it's meaningless. So I don't know if you want to expand on that, Jacob. I thought it was interesting.
Yeah, absolutely. This is something that we and my team think about on a daily basis, which is how do we not just make this technology available to our customers, but how do we make it extremely easy to use, easy to digest? What we see in the market is that ease of use wins 10 times out of 10. It beats free most of the time. A really good example in a totally different industry is television, right?
Yeah.
Technically, if you set up an antenna to your television, you can get free television. My guess is that not many people in this room do that because paying for cable or paying for other services is so much easier. And so that's what we're excited for. If we can get our hands directly on this technology, it's going to allow us to innovate in a way that doesn't just enable the underlying functionality, but does so in a way that is intuitive and easy to use. And it is that piece that we think can really accelerate the usage for our customers.
Do you think that this is the added value of fintech in that industry?
That's exactly right.
Okay. And we talked about global impact, and it's on the title of our session today. Bryan, I know Interac is doing its work mostly in Canada, but you are also invested, or you're aware of what's happening in the rest of the world. How can we scale this up? What's the benefit overall? And if you don't proceed, let's say we're not moving with real-time rails, we don't have enabling legislation, are we missing out on something?
For sure, yeah. I think this is a key question because if you look at countries that are doing really well here, I think that are seeing some of the benefits for the economy and businesses. And by the way, conservative estimate has just in Canada alone, real-time payments, payment modernization pegged at between $3 and $7 billion of GDP on an annual basis. Countries that are doing that well are the ones that have gotten both the faster payments, so the real-time payment system built, as well as the access rules and regulations. UPI in India is a great example. UPI is available across the country, currently processes 650 million transactions a day. And 25% of the country. It's also increased the share of India's digital economy from about 8% of their GDP to close to 25%. So really, has been a huge economic boon, and especially for small businesses, micro businesses, to be able to accept payments. It's phone based, so it's easy, it's quick, it connects to the banking system. All of those pieces are in place. And so I think having that and being able to look at examples like that, there's no reason why we can't do that as well, and we can't see similar benefits. Banking systems in Canada and the United States have evolved differently. We've embraced card payments before we went to mobile payments.
Yeah.
But as we look to what we need to be successful in the future, I think we need to actually look at some of those other markets as well that are moving quicker than we are.
So you're saying like essentially India like skipped, we talked about that, the credit card phase and moved straight
to
digital.
Straight to mobile. That's right.
Yeah. Okay, that's very interesting. So it's already 8:37. I'm not sure if we have some questions in the room.
I've got a quick topical macro question, given we have Canadians and
Absolutely.
folks in the U.S. here, but just in terms of the challenges of navigating tariffs, non-tariff trade barriers, banking regulations, et cetera. Any thoughts on how to look at the current state of affairs and how to manage through it, given trade tensions and given the ubiquitous nature of payments across the world? But how do you think about that in terms of potential for sanctions, et cetera?
Okay, this is a sensitive topic, so I'll turn to the other Canadian. I don't want to get involved in that. Maybe
it's a good. I mean, I might. I think we've talked for a lot of many years in payments about sort of aligning standards, aligning global standards, and I think payments is one of the areas that you've seen a lot of success. Whether it's EMVCo regulations, these are all sort of jargony terms, but a lot of standards that effectively enable the cross-border flow of payments and money movement. And that has been, I think, pivotal to, global commerce and trade. I think we're entering obviously a period of more tense relations when it comes to those topics. But I think you're already seeing examples of where, this can get even more we can increase the efficiency and pace, with Genius Act specifically and the movement of payments onto stablecoin rails. I think that's an area that we're looking at right now, especially in Canada's. The US has moved, Canada has to move as well too, and that's not about sort of necessarily being directly competitive, but it's about being able to operate in the same environment and operate with the same sort of technologies and on the same basis as other markets.
I think both countries want to preserve their financial sovereignty, I think, of their system. So that's important. I can keep building like Interac is doing local Canadian systems. But you talk about the Genius Act. I know that the government right now, the budget coming on November 4th, first Carney budget, they are looking at what the Trump administration did around the Genius Act to try to see is there anything we can learn from that for stablecoin legislation eventually. So that's there's still collaboration on that front. Any other question?
This is also kind of cross-border, but as somebody who does work across the U.S. and Canadian borders and with accounts in both countries and a small business that uses our product, there's still a lot of challenges to moving money across the border. We don't have real-time money movement. If I'm being paid in Canada, I'm lucky enough to have a Canadian bank account but moving the money from one side to the other is still really slow and creates issues. Getting paid from one country into the other country is next to impossible. There's no real time happening here.
Yeah.
So what do you see as sort of particularly in North America where we do share so much commerce, what do you see as the lanes that might improve that?
Yeah, I can take that to start. So there's a couple of things that we see here in cross-border payments is something that we're focusing on right now as a company for the very reasons that you were just talking about. I do think that this is where, when we talk about stable coins and cryptocurrency, where there's a really clear benefit. There's a lot of complexity in Forex markets, foreign exchange markets, and trying to move money from one place to another and change the currency at the same time. The thing that blockchain allows us to do is have that ledger approach where we can actually move money simultaneously and use blockchain to just be a ledger so that we can more easily actually allow that instant money movement without some of the risk that actually comes with cross-border payments today. So that's one way that we're looking at it. The other thing that I would say is that as we get our hands on more of the real-time payment technology, we're going to be able to understand how to leverage it. And even in some of these two-leg transactions, if one of those legs can leverage real-time rails, it can still be better than it is today, where you have two legs that are leveraging more legacy systems.
You have anything to add on that? Or
I think I would agree with what Jacob said, and the only thing I would add too is I think you're right. The experience is subpar. I'll give a shout out to our counterparts at Wise, Payment TransferWise. They put out a great report. Actually, the 2025 version is out just a couple weeks ago on what are the policy and sort of key regulatory hurdles around cross border. And so I think they've got some interesting analysis into, and they do country by country reports on who's moving, who's making progress, who's not making progress. So I think continuing from our perspective as policy leads to lean on, our respective governments and our respective companies to be able to advance, what we know. There are some solutions we need to do in places that we can go. Stablecoin is one option, but there's other things too. And so I think looking to that example is a good place to start too.
we have any questions? We still have 3 minutes. Sir, go ahead.
Do you think the mainstream banks are working fast enough to keep up with stable coins? Or like the things I'm reading, I'm a novice here, guys. Is like you have two streams, right? You have crypto, companies that are managing stablecoin. Then you have commercial banks, right? The things I've been reading, maybe this is all, lies, right? If for whatever reason companies started paying people in stablecoin, for example, and then you had wholesale large companies, say like a Walmart, Target, or an Amazon switching, and then the vast majority of people find that more convenient. Are they adapting? Is there a convergence? What's the outlook? And sorry if you guys covered this earlier.
No.
I can start. I mean, I think the short answer is probably no. I think the elephant in the room here is often bank versus fintech. And the conversation around we're either going too fast or we're going too slow or we're introducing too much uncertainty. And to me, I think it doesn't need to be a zero-sum game. I think there's clear models in place globally. I mentioned UPI. There's other examples. Brazil's PIC system is a good one as well, where these countries have figured out how do you ensure safety and soundness while allowing broader access to the system and allowing innovators to go to work. And I think that doesn't need to be a direct challenge on the security and the risk factors of the system. Of course we need to have those in place. But I think if we miss the opportunity to move forward with some of these technologies because we're worried about, we're going to be in a situation where we're getting increasingly caught and lapped by other markets as well too.
The one thing I would add to that is, as you think about, you're saying banks and crypto companies, and I think of, what we do as a payments facilitator is kind of in the middle. Each of those companies has a different purpose for what they're trying to do. Banks, primarily, it's how do we keep the money safe? How do we keep our customers engaged? The crypto companies are all on how do we get more usage on crypto? Where our focus is we're kind of method agnostic, right? We don't really care how customers are getting paid. What we care about is how do we get small businesses paid as quickly as possible. And so we think that we can be sort of a middle ground where we can bring in some of the speed of innovation while still having a little bit more safety and security that allows people to get more hands-on.
8:45. Do we have time for one last question? We do. We got the okay. It was here. Forward. Go ahead.
Okay. So we've talked about a couple things or a few things, and it seems like maybe they're at tension with one another. We're talking about stablecoin. We're talking about digital payment systems. We're talking about cryptocurrency, which is a little bit different as well, and then maybe a central bank digital currency. And so we're exploring. And then we talked about the movement of money or the flow of money across borders, and all of those come with their own sort of regulatory challenges or coming monetary policies that sort of govern trust and system. All of the things that we talked about, but because they're like separate sort of silos or maybe different lines of effort, what do you think is where we're going to get the most traction worldwide, or at least in terms of innovation and or adoption? And then where do we think that this is probably something that we won't do? It came out as a good idea, but probably won't do because there's so many hurdles and it would cause more destabilization in the system than necessary. And then where can we sort of focus our effort?
That's a very good question, and we discussed that a little bit when we were preparing. I was wondering, do we keep investing real-time rails when we think, for example, what's coming up in the next 5-10 years
Right.
with blockchain, for
Right.
example. So, you know, you had an interesting perspective. I think there's the answer is probably a mix of all of that, but I'll let maybe Bryan and Jacob expand on that to see what your thoughts are on that question.
Yeah, and I think, you know, you mentioned central bank digital currency. I think that's an area where a number of years ago the government of Canada was looking quite closely at that. I think less so now.
Right.
I think that globally we're seeing a shift away from the notion that central banks are going to be sort of issuing and minting their own CBDCs. I think that, you know, we may see a resurgence of that, but my view right now is I would put more emphasis on you know, fiat-backed stable coins as payment instruments and sort of, you know, treating those, you know, we often hear crypto is sort of key in investing, but, you know, how do we make sure that we have, you know, robust frameworks and enabling legislation that allows for that area to flourish? Because I think that will be the biggest benefit when it comes to things like cross-border that we've talked about, as well as for traditional payment systems. I think they'll need to be complementary to one another, but they can, you know, they can have a great impact with the, you know, relatively quick amount of speed too.
Yeah, the only thing I would add to that is I think we're still in early phases here. And so it's hard to know what the global adoption of any of these is going to be. I think you can look at them and try to assess, okay, which one do we think has better qualities, which one has better fundamentals. But at the end of the day, the thing that's going to become, you know, the globally accepted path is the thing that consumers and small businesses actually consume and actually use. And I don't think we have that answer yet. We're still in early days of exploring how do we build this, and again, ways that are easy to use, which I've been saying a lot, but that's really going to be the key pieces. What is the thing that doesn't require a lot of time and energy from consumers and businesses to utilize so that they can get, you know, the other work that they're trying to do that day done?
Awesome. Well, this is all the time we have. So I just want to thank Jacob and Bryan for coming today, making the trip from California. Really, really appreciate it. Thank you, everyone, for your engagement. And on behalf of Intuit, and thank you to Meridian for hosting us today. And I hope I'll see some of you at the ball tonight.
Thank you.
Thank you.